This is the Retirement Solution Podcast with financial advisor John Hicks, founder of J. Hagan Capital.
Glad to have you here with us on the Retirement Solution with financial advisor John Hicks, who is here to share his insight on what you can be working on to better prepare for your financial future and ensuring that you've got the right financial plan in place to help you reach your goals. RetirementSolutionShow.com is where you can start the conversation with John and his team about the questions that you likely have. We also have links posted in the show notes, or again, it's RetirementSolutionShow.com. And one of the biggest questions that people want to know about, the question every single person always has is, all right, okay, great, but what about me? How does this affect me, right? Rule number one, John.
Sure.
So the recent Fed cut was a bigger cut than most people thought. Most people thought it was going to be 0.25. Instead, they went for a full 0.5, 50 bips.
Sure.
The first interest rate cut in 4 years. And Morgan Stanley's Jim Caron tells CNBC that the Fed is now in a balancing act as it continues to cut rates through next year. Here's what he said.
So if we think about this as an insurance cut, I think that's the right way to phrase this. So effectively, the Fed is taking a risk. And the risk is that if they go too fast right now, if they cut rates too quickly, they may increase inflation. But on the other side of that, the risk is that if they don't cut quickly enough, soon enough, then they risk a deterioration and potentially a recession in the economy and a rise in the unemployment rate.
If they do this, then that. But wait, there's more. And here comes this and that. And the whole thing is stressful and confusing. But the question for you is, John, again, how does it affect me? Do you see opportunities in the market during this rate cutting cycle despite the risks? What are you telling people right now?
So, it's really interesting. If you look back at the medieval period of time, there was a philosopher or whatever it was back in the day who was trying to figure out, how do you make an impossible choice? They called it Occam's razor.
Yeah.
If you do this, you can make that decision, but this could be the aftermath. And that's not very good. Or if you do this, that could be a terrible thing for the future, blah, 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 blah. Ultimately, no matter what happens, if you have a solid financial plan and an income stream, and by the way, we've talked about this on the show multiple times.
Yeah.
If you have 3 to 5 succinctly separate income streams when you're going through retirement, it really doesn't matter. I hate to say it, it almost kind of doesn't matter what happens on a day-to-day or month-to-month or quarter-by-quarter basis. So whether they increase or whether they decrease rates right now and it causes more inflation, and eggs go from $3 a dozen to $7 a dozen, well, I know what we're going to decide to do, right? Eat a lot less eggs. Probably, right? So if ground beef goes from $2.99 a pound and it's already almost $4.79 a pound or whatever that number is, and that goes to $9 a pound, well, we're probably going to be eating more chicken. Those are simple things, right? But what does it matter and what does it mean for our long-term retirement, right? So if you're thinking that in the next 3 years, you might want to hang it up or you're already retired, here's what I want you to kind of think about, because here's how it's going to affect you. Is it a chance in the world that you have a mortgage that could be benefited by refinancing if rates go lower? Some people, yes. Some people, no, right? But as cheaper borrowing costs happen, is that a good time to maybe consider a lake house? If there is a recession, turn lemons, guys, into lemonade. Because I have been looking for a lake house for years. Even right before COVID. They weren't building very many. After COVID, they didn't just go up a little bit. They went hyperbolically
skyrocketed, I know.
To where I'm like, there is no way at my age and the ages of my kids that I'm going to use it enough to pay that kind of price for it, right?
Yeah.
So I could be wrong again. And I could think, well, maybe they'll have to come down a little bit. But if there is a recession, I'm going to be looking for it to be a net buyer of a vacation home, probably one closer, lake type house, right? So you can consider those types of things. Those are opportunistic costs. If interest rates drop further, we may be able to refinance some things too, which is also pretty good. Now, here's going to be one of the caveats.
Okay.
We have gotten really spoiled this year to having really attractive CD and money market rates. And if you look at the amount of money that's in money market and CDs, we're talking trillions of dollars. That in the long run is probably going to be a terrible place to park that money. When they say cash is king, I fully disagree. Depending on how much time you have it there, cash can be good if you are opportunistically waiting to buy something. But historically, inflation has always run higher than bank rates historically. This is how it goes.
Right.
You will lose purchasing power. So if today you have enough money in that bank account to buy a Cadillac, within 7 or 8 or 9 years, you may not even have enough money in there to buy a Fiat or something much, much smaller, right?
Okay.
So we have to understand what What do we want our spending power to do? Because if we keep having inflation, that's going to destroy retirement for most people. By the way, that is the one thing that'll affect almost every one of Americans, almost every one of us, regardless of market performance, if inflation stays in the 4, 5, 6% range for the long run. It just is, because if inflation stays that high, it's going to be hard for the market to actually keep up with that. It's going to be nearly impossible for bank rates to keep up with that, and things will cost so much, we will not have the same standard of living, right? We won't have the same cost of things. So we have to have some elements in our portfolio that can still do well, even if we have higher inflation. Right now, there are all kinds of things like option hedging or insured indexing, where you can literally buy a structured note or a principal protected note issued by a bank. They will insure your money. Right now, if the bank goes under, you have to look at FDIC guidelines. But essentially, if in that situation, you have your money insured. But if the S&P 500 goes up in this example, or the NASDAQ, or take your pick, whatever you want it to be based on, if that index goes up, you might be able to get 8 or 9 or 10% on your money. Those are still very attractive, Heather, and that's a way that you can safeguard your principal, protect it, but also still get much better rates of return than, I guess now, the 4.5% rates that we're going to see in money markets, right?
Got it.
So take that as an opportunity to look, because rates are probably not going to do anything that can go down but here. Can you lock in 3 and 5 year options? Because you're not going to probably get those options 5 or 6 or 7 years from now. You just probably won't. So does it make sense to shave off some money and do that? You can do it with insurance companies too. You can do it with some type of trust accounts. You can do it with some permanent life insurance. But essentially, banks and insurance companies right now may be one of the better games in town. Seriously, if you want to protect your downside risk, potentially generate an income, but then do better than the 4 to 5% rates that we're probably going to see from markets for a while. So that's what I would look at, overall from an opportunistic standpoint.
RetirementSolutionsShow.com. If you have questions about these kinds of things and how they could be applied into your overall plan, reach out to us. Let's get to work figuring that out, because it's different for everybody. So we want to see what your specific situation and setup is, and then work to create something that you're comfortable with within your portfolio. Again, it's RetirementSolutionsShow.com. We also have links posted in the show notes. All right, so you were talking about the idea to find opportunities outside of the market, but also thinking about with the information that we're seeing, and if rate cuts continue, and what about a recession? What do we need to be thinking about when it comes to risk and protection?
Yeah. So here's a big one, and I'm gonna concentrate for a minute on people that own real estate outside of their personal home, or if they're small business owners. Guys, I'm gonna tell you right now, these may be some of the best multiples you're ever gonna see over the rest of the entire your entire lifetime. The multiples that I'm seeing my clients, they're coming to me and saying, John, they're gonna give me 8 times what we earned last year to buy my company. They're gonna give me a check for $24 million. Can I afford to do that? Should I do that? We've never thought that the business was worth that much.
Right.
Or, hey, John, I've got this small strip mall right outside, in this little podunk area of Kentucky or Tennessee. And hey, we never thought we'd sell it, but they're offering me a number that I almost can't say no to.
Yeah.
Because we've had issues with tenant turnover. We've had issues with zoning issues or easement problems or things like, hey, should I take this? And I was like, well, it depends. Do we need it to create income? How much income was it giving you? And what can you do for that? Same thing with selling your business.
Okay.
The amazing thing is, guys, is a lot of people don't do that because of taxation. Here is one of the most awesome opportunities right now before the tax code expires in a couple years, basically a year and a little bit.
Yeah.
They're going to change the tax code, and we don't know what it's going to look like. But right now, if you have a business that you're looking at selling, a huge piece of real estate, or something you do not want to pay the capital gains on it because it would cost you fortunes, you might be able to completely eliminate or completely defer that tax for the future. Potentially even eliminate that tax in the long run with smart trust planning.
Got it.
So there are so many things that if you're a small business owner or a real estate investor, that I would say, hey, this may be one of the best opportunities to diversify yourself of that business or that real estate. Basically lock in the best rate you're going to get, but you can take that money and turn that into a tax-efficient income stream, right? So I was doing the math. So the gentleman that I was talking about, this is a real human being, and he's potentially going to get $24 million. I'm pulling my calculator out to make sure I get the math right.
Okay.
$24 million is what he may be getting for the sale of his business that honestly, he was just going to hand to his kids. And he was doing the math. He goes, and I asked him, I was like, what did you roughly take home last year?
Yeah.
He said about $350,000.
Okay.
You know, I make a great amount of money.
Yeah.
You know, I could have never done this in anything else. I was very fortunate and lucky. We did the math. That $24 million that he may earn, if we can, at least in the beginning, defer those taxes, would potentially give him $1.3 million a year in income. If we just did a 5% withdrawal rate, ladies and gentlemen, you can get 5% in money market right now. So was I confident that he could sustain that?
Yes.
Yeah. So he could keep the income he had, take the rest of that money and fund an islet to give all of his kids a psycho amount of money when he and his wife are passed away.
Wow.
And they don't need the money anymore.
Wow.
And it could potentially be tax-free. When we kept going back at the math, it became apparent to me that he is not the only one in that situation.
Mm-hmm.
There are potentially hundreds of thousands of Americans that are facing or could potentially face that exact same possibility. The amazing thing is they haven't done it because, number one, they don't know the valuation of their business, what it would be worth. Number two, they don't know what they would do with the money if they had it. But number three, they don't want the tax bill. What if you could fix all three of those major issues?
Mm-hmm.
Right? And at one point in time, we're going to have to pay the government something. Correct. But we can decide with proper tax planning at what point we pay them, how much we're going to pay them, and exactly what way we do it. Is it going to be you when you're alive, your spouse once you're gone, or your kids once you're both gone? And there's always going to be a different answer based on what you want to achieve, right?
Okay.
So, but those are those things where I'm saying, hey, recessions can be great. They can also give you a lot of understanding. If we could be facing a recession, what are some really smart things you can do today before it happened? And could you be better off than any other time that you would have made the same decision?
Seeking opportunities that exist, no matter what the environment might be. Problem number one, let's solve that. But then also, I really like the idea you were talking about, John, particularly for small business owners that have poured their entire lives into this company they built, taking the control back on what happens with the sale of that business, not just for themselves, but for their kids and grandkids, the generation, the legacy planning. Again, seeking opportunities despite the environment is what John is here to help you figure out. So find us anytime, retirementsolutionshow.com. That's where you can go to get started on a conversation with John and his team at J. Hagan Capital. We also have links posted in the show notes. Or again, it's retirementsolutionshow.com.
Thanks for listening to the Retirement Solution Podcast with John Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital. National license number 1882794.